Hey everyone, it's Daniel here from etfs. Hope you're all doing well. Let's talk about an article that has come out. It's pretty interesting and ties in with the narrative of all this high inflation, food prices going up higher. Although, yes, you might have seen headline inflation come down lower due to lower oil, gas prices, and energy prices in the previous month. However, the core number still is elevated. Shelter, food prices, etc., still is elevated. And now, and behold, a new article comes out where it says global rice shortage is set to be the biggest in 20 years. So this is an article from CNBC. I'll link it in the description so you could read up on it. But this is basically huge. So let me go through this article. It says, from China to US to the European Union, rice production is falling and driving up prices more than 3.5 billion people across the globe, particularly in Asia Pacific, which consumes 90% of the world's rice. Well, surprise, surprise, right? We had COVID, we had all these issues with supply chain issues, and prices moving up higher, and it's no surprise that we're seeing lower supply coming from China to the West, because we are literally in a war between there's a war between the West and the East right now, right? And it's not a typical war that you see like back in World War I or World War II, where you'll see the gun firing and whatnot. This is totally different. And this is totally different where the masses, the big behemoth economies, are fighting with each other, like the US and like China, because they simply just don't agree with each other on the practices and the powers and so on. There's a huge power shift going on, right? Which is why one and the other countries, and many countries, are trying to squeeze each other for this opportunity. That's why you hear about all the the BRICS nation and the de-dollarization that's happening, trying to get off the US dollar standard, right? This is all playing in to the idea of getting off the US dollar standard, to making the US weaker and making the West weaker and the East more powerful. And a simple example like this just shows you where you have rice production falling drastically, and because two of the main large producers of rice is China and India, and if you get those producers producing less, then definitely that's going to seep into the inflation, to higher food prices, as rice is a staple food for many people and goes into many other ingredients as well, right? So going further into this article, it says the global rice market is to log its largest shortfall in 2 decades in 2023, according to Fitch Solutions. And deficit of magnitude for one of the world's most cultivated grains will hurt major importers, an analyst told CNBC. At the global level, the most evident impact of global rice deficit has been, and still is, decade high rice prices. Now, rice prices are expected to remain notched around the current highs until 2024, stated a report by Fitch Solutions Country Risk and Industry Research dated April 4th. Now that's very interesting, right? It also says here the global shortfall for 2022-2023 would come in at 8.7 million tons, the report forecast. That would mark the largest global rice deficit since 2003-2004, when the global rice markets generated a deficit of 18.6 million tons. 2003-2004, that was before the great financial crisis, right? You had higher prices, you had the buildup of inflation moving up higher, and food prices moving up higher, energy prices moving up higher, which eventually, and also let's not forget the housing bubble that also blew up, and eventually everything fell and cascaded lower, and a lot of people got affected by this. So we're seeing similar signs back at these levels where we've seen an increase in these food prices, these big jumps in supply, and on top of that you've got this war which is projecting a really not good scenario down the road. Now on top of that, this article gets into at the bottom here, it says that the global rice market will return to an almost balanced position in 2023-2024. Why are they projecting that things are going to be balanced in 2023-2024? Well, what rings a bell in end of 2023 and in 2024? Recession rings a bell. So if you get a massive demand crunch and you get really prices to really drop because of the demand crunch, because people are losing jobs, because the economy is deteriorating, that's why they project that these prices would come down. And sure, it can definitely do so if you've got a recession, and especially a hard landing rather than a soft landing, for these prices to come down. And we've seen that before. Yes, 2003, 2004, 2005, 2006, 2007, prices all went up, right? Housing market went up. But then when the hard landing came, when the recession came in 2008, you had those prices come down. You had inflation come down, the CPI come down. So same thing. In order to get CPI and inflation down, to get these food prices down, you do need a hard landing. You do need that recession, which I believe that the Fed is aiming for, that the central bank is aiming for, in order to combat these higher and higher prices. So let me know what you guys think. Leave a comment below, subscribe, hit the like button, the bell icon to be notified on the next video, and I'll see you guys around. Cheers, bye.